Let's talk about World Bank. So, World Bank was also created in the same year as the IMF. So, both of them are the present or a product of the Bretton Woods Forum in 1944. And in this case, they had a different agenda. So, while IMF was focusing on macroeconomic stability and practically the stability of the fiscal policy, World Bank was much more like a project-based institution. So they are focusing on infrastructure. At the beginning, it was just focusing on the reconstruction of the physical infrastructure in post-war Europe. But once these projects were ended and dried up, then they started to focus on all other economies and not just reconstruction, but practically developing the physical infrastructure. And later on, they realized that it's not enough just to build highways, bridges, tunnels, and so on, but it's also necessary to improve the human capital. So not just physical capital, but human capital. Projects were introduced in late 80s, early 90s. So education, healthcare, all related infrastructure like sanitation was what became also the focus of the World Bank. But that's why they have a completely different set of mind. So first of all, they have this long-term investment perspective like the IMF. So they are looking for things which can improve the output and also the tax base of an economy on the long run. So that's why public goods infrastructure is in their focus. But also, their services are needed because in many cases it would be really hard or really expensive in terms of interests to collect funds for such projects. So we could say that, yeah, but we can issue government bonds for such a project, which is valid for an advanced economy with deep enough capital markets, just not for the rest of the world. So it can be much more reasonable, reliable to take in one of these international banks into the project. Still, they are not providing 100% of the project's funds. They are just co-financing. So 1/3 of the money is coming from them in case of long-term loans, but also they are trying to mobilize regional development banks and also local capital markets. So they are just one component in the funding procedure. And that's why they are trying to sweeten the project, sweeten the financing, decrease the risk-related interest rate components, and also they are trying to building some kind of a financial infrastructure for such long-term projects. So that's why they have many loops. So the benefit on the one hand is that yes, they are financing the project, but on the other hand, that they are also trying to stabilize the local bond market. They are trying to motivate banks to collect domestic savings because then it can be tunneled in. And also, since they are really strict in terms of funding, their projects are usually well made, or at least these loans are repaid. So at the end of the day, they can be highly efficient. Okay, but IBRD, which was the original bank of the World Bank Group, is just one thing. So after that, we have additional companies involved. And IBRD was created also as a bank. So just like the IMF, IBRD is also a non-profit bank owned on paper by the United Nations, but practically the same countries which are the shareholders of the IMF, basically with the same quota, so with the same voting power ability to contribute and also to take up loans from the World Bank, they can have also contribution to the IBRD. So they are using completely the same quota system and funding scheme, and that's why also they are using this really strange equity structure that only 25% of the equity is paid in capital. So the remaining 75% of the equity can be paid in upon request if the bank suffers losses, just like in the case of the IMF. So it's really strange that most important international financial institutions doesn't covered completely by paid in equity, just 25% of the equity. The same will happen in case of the BIS as well. That all of these things were created after World Wars and nobody wanted to allocate resources for such projects because they were lacking such resources completely, so it was much better. Just when I was learning accounting as a student, I was always not understanding that why it's good to define equity at a level and not paying everything in, because it can be not. So it can be sketchy for a company that, okay, they doesn't have 100% paid in capital, and after that we can see that, yeah, all the big international firms are doing this. Yeah. So IBRD nowadays provides loans for middle income and creditworthy low income countries. And not just loans, but also guarantees, risk management products, so we can get options and sometimes insurances, and also analytical and advisory services. And how they collect money? This is a serious difference between the IMF and the IBRD, because IMF was collecting funds directly from the governments, practically one or some percentage of the foreign exchange reserves are channeled into the IMF. In this case, IBRD issues bonds. So they are going to the bond markets, they are issuing bonds, and not just in US dollars or SDR or whatever, but they are also issuing bonds in local currencies. So if they need to finance a project in Nigeria, then they can issue bonds in Naira. That's why they would like to mitigate the foreign exchange risk, for example. And also in this case, they are creating a low risk bond also for these economies, which can be much better as an indicator for the yield curve and all the other valuation for the financial sector. Okay, the next thing, International Development Association. So this one is focusing on the poorest economies, so where creditworthiness is not that great, and in this case only market-based, bond-based financing would be not appropriate. So in this case they are providing interest-free loans, which means that this is still not aid, because it should be repaid, but at least not, you don't have to pay interest. You are, I don't like this concept, but you are not forced to grow as an economy. So practically in this case, this debt can be outgrown, because in many cases, not just in emerging economies or poor economies, but also sometimes even in advanced economies, there is this illusion that you can outgrow your debt. Yes, if your productivity increases significantly more, so if you have some multiplicative effect, but if you are not able to outgrow it, then the problem is that your growth ratios, your productivity growth is less than the interest rate behind the debt, then you will face troubles. So in this case, they abandon the whole idea. They are providing interest-free loans, but it means that it requires donor funds. So from time to time, the rest of the world should put in some money, because still they need additional capital. And in this case, they can provide these interest-free loans to finance basic social services. I mean, projects related to basic social services. And also we can see that they are really long. So from more than 20 years until 40 years long. And even at the beginning, they have a grace period, then you don't have to pay capital. So until you can ramp up the project, finish the project, then you can start to realize some kind of revenues because these projects were contributing to the increase of tax incomes. Then you can start to repay this debt. Also, it was linked to the HIPIC initiative, and also it was linked to the Multilateral Debt Relief Initiative in 2005, and the G8 countries realized that it's much better to link grant and loan programs with also social projects. So that was the time when also aid for trade programs were designed, because it's not enough just to remove debt, but also if you are forcing governments to do something also at the same time to get some kind of money, it has much more long-term end results. Okay, so these are the target countries. At that time, Ghana was part of this, but after that, if I know well, that they were leaving because they are way too better to be part of this group. So sometimes countries can leave the system. Okay, so let's go back to the World Bank group. So we have the International Finance Corporation. So this is the third part of the World Bank group. In this case, this is focusing on the private sector. So this is for companies, and that's why we can see here also not just debt, but also equity funding, which is highly aggressive and way more risky than the rest of the World Bank group members. And also we can see that they have full paid-in capital, so that's why they were trying to create buffers against losses. So this is also a key difference compared to the IMF or the IBRD. But also their bonds are AAA rated, so they can be considered as low-risk entities. So how can we get money from the IFC? We should be located in a developing country, which is member of the IMF, World Bank, and everybody else. We should be a private company, so no state ownership is allowed. We should be technically sound, so we should have proper reporting, and also we should have good prospects and of being profitable. So at least we should have a reasonable business plan and some track record. Also, we should provide benefits for local economy. Okay, so we should have good marketing, and we have to be also environmentally and socially sound. Again, we should be really good in writing reports like ESG reports. And after that, we can get loans, we can get syndicated loans, we can get equity finance, structured finance. Again, risk management products like options, future contracts, because in many cases, the problem is that if you don't have derivatives market and still you need something to mitigate foreign exchange risk, then these are the only options. So we can go into the IFC if we need anything for risk management, because on market basis we can't have, because the market is missing. Also, we can get local currency financing. This is absolutely crucial. So financing in key currencies, the benefit is that interest rates are low or the lowest possible, but the problem is that in this case we are building in all the foreign exchange risk into our business plans. Until we are exporting, it's not a big deal if there is a depreciating currency. Personally, I hate it because if we can plan always or rely on depreciation, which will create artificially higher and higher profit in domestic currency, it will mean that we are not forced enough to increase our profitability. So sooner or later, these companies will still face troubles. But again, local currency financing can create much more stability for such companies because in this case, capital flows, foreign investor sentiment, and all the other nasty things which can happen on capital markets will not affect these companies. And also, private activity and investment funds are managed, and also trade finance is also present, just as invisible from the URL. So if you can get any export contract or import contract, doesn't matter. So if you are related to foreign trade and you have a contract that if you are manufacturing or selling some kind of a quantity from a goods or services and you will get paid at this time period, then until this time period you can get a loan from the IFC if you are meeting all these requirements. Then we have another Multilateral Investment Guarantee Agency, so MIGA, which is an insurance firm. So in this case, we can get different political risk insurances for investors and for lenders. So if we have to face some unwanted transfer restrictions, so we are not able to move out our profits, also for hostile government actions when they are just taking over the company, also war, terrorism, civil disturbance, breach of contract, or non-honoring financial obligations. So all the nasty things what we learn at International Financial Management on the second class at the lecture, we can have some products against them because so the second step after valuation in case of International Financial Management class is that we have to define all the political and financial risk for the company. So how they can operate, how they cannot operate. So in this case, it's crucial that we should have also answers, not just identifying risks here and there, but also how can we mitigate these things. Also, we can see that the fees are quite reasonable, so only 1% of the insured amount per year, and the coverage is up to 15 years. And also, we can see that also the upper limit is quite nice. And the last thing is the International Center for Settlement of Investment Disputes. I have a story for that one because usually there is no information about them. But during the mid-2000s, the Hungarian MOL, which is an oil, so a company in the oil sector, so they don't have much extraction. Mostly it's about refining and selling such products, and also they have some subsidiaries in the chemical industry which are making plastics. Anyway, so during the 2000s, they tried to become a multinational company, so they were already listed on the public stock exchange in Budapest. So they started to buy up refineries in Slovakia, so this is how they got Slovnaft. Also, they purchased a minority and a majority package in Croatia, in the INA, so company through privatization. And the problem was that after that they started to do a lot of investments into the local refineries to improve their productivity, because the business plan was that while the Hungarian and the Slovakian refineries can be operated mostly and only from Russian crude oil, because the whole technology was focused on this high sulfur content crude oil, and which was also way cheaper at that time compared to the Brent. So Ural type is always cheaper with the margin. than the Brent one, but you can operate these Adriatic Sea refineries from oil which can be imported from elsewhere, and after that you can transport both the crude oil and both the refined products through pipelines to Hungary if there is any trouble. Yeah, so the idea was perfect. One problem happened, that the next government, after elections, realized that there were some corruptions during the previous governments. Obviously, they tried to take back the share package also from the mall. We said that no, we don't. We never had any corruption. Obviously, never happens. And also they invested a lot of money. So, what can you do in this case? You can go to the ICSIB. And in this case, they started the trials. It went through all the back and forth games at different courts in Europe and also here. And at the end of the day, the Croatian government lost all these trials. The last one was lost last week. And now the Croatian government should pay more than 200 million US dollars to compensate more. Because of not just the accusations, but also because they were hindering their project. And so there were some points when even the head of the mall group had to face with some... so he was wanted by the Interpol at some point because Croatian authorities wanted to get him. So it was absolutely nasty. But in this case, if you get ruled by the ICSD, then this is the final decision. So after that, you cannot appeal to anywhere. After that, you have to pay. Or if you are not paying, then in the US or maybe in the European Union as well, any government can seize the Croatian government's assets, and after that they can pay. So even if you are not paying, you can be forced to pay. So that's why this court is highly preferred. Obviously, in this case, you have to spend a lot of money on lawyers. So I can imagine that maybe 1/3 of this, or more than 1/3 of this 200 million US dollars will be spent on lawyer fee, because this is absolutely expensive, but yeah. It is what it is. So, let's see IBRD activities. So, as I mentioned already, they are focusing on middle income and credit-worthy low income economies. And in this case, they are trying to reduce poverty and they are trying to build shared prosperity sustainably. This is when marketing people are coming up with perfect sentences. So first of all, talking about real terms, so they are providing financing, guarantees, and hedging and disaster risk financing services. So financing is a flexible loan for really long time, so 35 years. It's LIBOR-based, so it's variable interest rate loan. It was based on the London interbank market rate. Now it's changing because LIBOR had its own scandal during the 2010s when Bank of England realized that big banks were manipulating LIBOR rates. So right now there is still a confusion because all the different key economies were coming up with their own idea about how to define variable interest rate benchmarks. So, yeah, this is a confusion, but doesn't matter. So, variable interest rate loans are provided. You don't have to remember it's LIBOR-based. Also, as you can see it, these are local currency loans, because at the same time there is a parallel bond issuance also in local currency. Yeah. After that, they can provide guarantees, so it's again related to some projects. And in this case, the MIGA will do the job. And also, in case of private sector, they are preferring investments into oil, gas, mining, power, telecom, transportation, and water projects, because I can't say they are simple, just they are much more simple, and also they are absolutely capital intense. So, but still quite standardized or relatively standardized compared to other projects. So you have to build some kind of a pipeline or a network for something, and after that move stuff around. Also hedging, so financial risk management. So they are providing interest rate and currency swaps. Usually, if you need any swap, you can go to Morgan Stanley or another investment bank. But if you don't have this support, because maybe they are not serving this market, then this is the only option to mitigate currency and interest rate risk. Also commodity swaps. Yeah. And disaster risk financing, because usually if there is a disaster, you can't use insurance. So you are locked out. Practically all insurance contracts have the disclosure that if there is a disaster is happening, so all the losses, for example, the whole city is erased, then in this case the insurance will not pay. That's why we have the state. Just in this case, maybe we don't have a state, or the state will default during the next day. So that's why they are providing also disaster risk financing. In practice, in the US, they have also disaster risk bonds. So in the US, the insurance market has their market-based response for this thing, which is quite strange, because they are issuing the bond and they are paying some kind of an interest. But when the disaster happens under the defined parameters, then the bondholders must pay the money. So it's a really strange form of contract, but okay. So, and also knowledge services, so practically they are helping and supervising the project. And once I had a PhD proposal coming from a colleague. Luckily, after that he was changing this, but this is the only bank when we have one-to-one ratio between the debt and equity. So, because usually in the banking sector we doesn't have anything like this, but in this case everything is covered with equity. This is not actual, because we know that only 1/4 of the equity is actually paid in, but on paper, equity, we can say that they are trying to mitigate all the possible risks. Also, they are focusing on syndicated borrowing. So as I mentioned already, usually 1/3 of the loan is provided by the IBRD. Then for the remaining part, they are looking for the support of local, regional banks and also national banks. So they are trying to mobilize domestic savings, because in this case it can be much more suitable. Yeah, so on the liability side of the bank, we can find the bonds, which can be issued in US dollar, euro. In this case, they can tap these bond markets. Also, we can see really long maturities, which can be preferred by pension funds. Also, we can see that they are really good rating or excellent rating. Also, if you are buying this as a bank, you are not forced to have any kind of your capital should not be increased, because, or the regulatory capital at least should not be increased, because it has zero risk weighting. Because usually if you are providing any kind of a loan, 8% or something around 8%, it depends on the country and the situation, but 8% of the loan should be covered by capital elements, but not in this case. That's the same thing what happened in case of the ESM bonds that I mentioned last week. Also, they are issuing bonds in non-core currencies. So as I mentioned already, Nigerian naira, Chinese renminbi, Zambian kwacha, Chilean peso, Swedish krona, Thai baht, New Zealandian dollar, and Turkish lira is also a currency. And it depends on the project. So if you are moving into another country, then they can also issue there. In this case, they can also mobilize domestic savings, which is also an objective. That is, it's not enough if we are just exporting capital somewhere, because also people are living there, so they should have also some kind of savings. Also, they have minimum size requirements, so they are not focusing on projects with less than 5 million US dollars. And also, it should be long term, so maturity should be longer than 1 year. And also, it's really interesting that they have floating rate, but they have the option to cap or floor or create barriers on both directions for the interest rate. So they can create the contract that, okay, the interest rate cannot go increase above this level or under this level, or the interest rate should fluctuate between these levels, even if it's a variable interest rate and even if it follows some kind of a external benchmark. So in this case, they can also mitigate the effects of external shocks. And then also they have short-term bonds. Doesn't matter. That was another disastrous PhD topic. It was abandoned within 1 year. So it was a great idea. It sounded great, but the problem is that we don't have any information about them. So if you are checking the website with these links, you can see that, okay, they are issuing these bonds and so on and so on. But after that, it's really hard to get any kind of a data that what happened in practice. So how much capital was allocated at the end of the day, what kind of projects were made from this money. So on one hand, World Bank is transparent. On the other hand, this is still a bank, so they are not way too transparent. At least now we have the definitive icon database, and within this database we have a whole sustainable and green finance bond database or sub-database. So now if people are interested in this topic, they can dig for days or weeks to get some data, but for me this would be a nightmare to find anything and to write any coherent story about this. In the past there were some assumptions that maybe these sustainable bonds can have a premium. So that was the premium, or there were other concepts like this, that if you are financing a project like this, so maybe you should compensate the investor that you are participating. But since then, there were many studies, and after this initial assumption was completely falsified, so some other papers identified a negative interest rate because people started to realize that, yes, but these projects are absolutely well supervised, so maybe they are way less riskier than usual projects. So, and also they are much more popular because many mutual funds or investment funds were created which are just focusing only on such bonds as an investment. So that's why there is a huge appetite for such bonds. And there is also this hypothesis of negative premium compared to conventional government bond or sovereign bonds. And there is also a third part of the literature which says that practically we cannot decide, so it depends from bonds to bonds. Or also there is still insufficient amount of bonds to understand, so we cannot build up yield curve only from green bonds and only from conventional bonds to see that, okay, this yield curve is increasing, decreasing. We had one small academic journal paper several years ago where we abandoned the idea of focusing on the premium. We were just focusing on the volatility of the yields of these bonds, and we were able to see that at least they are more volatile. So they are a bit riskier, but that was all because of lack of proper data. So it's a really nice territory, it's a really nice field. We have even a whole class, so if you are interested in this topic, then you are highly welcome during the next semester at Green Finance class, because people are coming from the National Bank, and also I'm teaching there. And there is practically this is a mixture of macro-related, financial, and also accounting-related topics. So everything which is related to green finance, then you can find at this class. Still my problem is that maybe 5 years later we will have much better data. But also that was my idea 5 years ago, so just now we have more data at least. But yeah, so it's still under construction, even by central banks. So central banks are always coming up with new ideas, and many of these great new ideas later on abandoned. Yeah, so for example, they had this eco bonds, which was already expiring 10 years ago, but still we can see that it completely looks like as an ordinary bond. So it has a rating, a term, also a strangely defined coupon. So practically it has it's not a fixed interest paper, because some eco price return index will modify this. So it's an index fund, it's index fixed bond, which is again quite strange. So this is not that common that we can see some thing like this. But as a only investor, I'm much more used to say that, okay, we can have indexation towards inflation or some macro variable, but practically this is an index for equity market. So also we have denomination as usual, so otherwise. Also there is this socially responsible investing or ethical investing thing. Yes, but as an investor, at the end of the day, you can see what is happening. So with the sole purpose to show my hatred, I invested some of my money into a socially responsible investing fund. For 2 years it was in losses, now it's making some money, doesn't matter. But in this case, as an investor, I can rage upon the issue that this is absolutely non-transparent. So as an investor, I'm saying that, oh, it's written there that is socially responsible as an investor, but after that, from the monthly or annual portfolio reports, I can't see anything. But how the money was invested and into what. So it's nice and cool, but absolutely not convincing for the investors. So I can't say that, oh, I saved the world, because maybe they were just financing something, cut down the forest and then sold the timber as biofuel for some power plant, and that was all. So I'm a bit suspicious. Okay, so let's see the other bank, and the last one, Banco for International Settlements, BIS. They are different because they were not the product of the Bretton Woods conference. They were the product of the First World War. Because after the First World War, the winning countries, so Great Britain and France, needed reparations from Germany to highlight that they were actually winning. In practice, everybody was losing, but okay, so they were the winning powers from military and diplomatic perspective. So, and to highlight this, they asked for reparations for practically until the 80s, 1980s, that Germany should pay. And still we can see that this was a really long process until through many different conferences, they realized that, okay, they were able to convert all this debt to securities, to bonds. At the end of the day, Germany did not pay much at all, so in the first several years they were paying, then Hitler completely suspended it. Then West Germany refused most of it, and also it was lifted, most of the payments. So a really small amount of money was repaid by West Germany until the end of the 80s. So still we can find traces of these bond payments, but it was utterly useless. Still, someone needed to supervise these payments. So that's why that was the key motivation to create BIS. The other key motivation to create BIS was that before the First World War, most of the gold reserves were stored and also supervised at the Bank of England. So even Germany or the Habsburg Empire, Austro-Hungarian Empire, stored a significant part of their gold reserves in London because it was cheaper, easier. They had the vault already there. There was the gold market where you were able to buy stuff. But after that, they realized that, okay, if you are keeping it and you are fighting with Great Britain, then you are not able to use this for these funds. So that's why BIS was also created, because in this case, this was located in a nice and friendly Switzerland. And in this case, the central banks can not just put their gold reserves there, but also they can keep some part of their foreign exchange reserves there. So what we can see that they have a smaller set of countries, so only 60 member central banks are present. Okay, now it's less than because Russia is right now locked out, but at this time when I created the PPT, it had 60, but still they are responsible for the majority of the world's GDP. And nowadays, this is just a central bank for central banks. So it provides liquidity services. So if as a central bank you need short-term funding in foreign currency, then you can go to the BIS. If you would like to invest some part of your foreign exchange reserve, you can put it also into an account at the BIS. So usually they are just supporting short-term liquidity management. And what is much more relevant, that they are part of legislation. So, for example, the whole banking regulation, so all the Basel 1, 2, 3, 4, was created by the Basel Committee under the BIS. So many people who are working at central banks at some part of their career are going to the BIS because BIS has many good and excellent grants for central bankers to work there for 1 or 2 years, and the end product of their research will be published as a working paper. And after that you can go back to your country to work again in your central bank. So this is an excellent think tank, knowledge base. That's why if you are writing your thesis in any topic, it will be really probable that if it has any kind of relevance to finance, that BIS already published some kind of a working paper or research paper on this field. So they are really into niche topics or really into specific topics. Also, if you need cross-border lending or capital movement data. This is what they are also collecting and publishing. So they are really nice people. Also, they have many other different committees. Nobody knows them, only the Basel committee is famous enough, so for this you don't have to learn it. Just I wanted to list it because at least we can see it before we are forgetting it. So, yeah, so they have their products and services. First of all, BIS is for profit and it's listed on the stock market. So if I don't know about the liquidity of this share, so is it easy to buy or not? I remember that actually, so it's really expensive to buy one share. So mostly retail investors are locked out, but even private investors can buy shares on the Paris Stock Exchange and also in Zurich. But if you are not a sovereign entity, you cannot vote. So you can collect the dividend because the company is also paying dividends. So since it's for profit, it means that except 1 year, I think they were only suffered losses in 1944. So since then, they are paying dividend regularly. So if you are a private investor, then you can get the dividend. Also, you can enjoy if the stock price increases, but you are not able to vote at the annual shareholder meeting because this is only for central banks. Otherwise, as you can see it here, that BIS provides money market instruments, so lending for short run and borrowing for short run. Also, they have tradable instruments, which means bonds are issued, and we can see that from 1 week until 1 year, and after that 1 year until 10 year, bonds at fixed rate or variable interest rate are issued. Foreign exchange and growth services are provided, so many central banks, if they are locked out from the cross-central bank swap lines, then still they can do swap agreements with the BIS. And also we can see that forward contracts can be created, so hedging with derivatives is available for them. And also safekeeping services are provided, not just in, they have it in Bern, okay, so in Bern, but also in New York, also in London. And also they have asset management services, and that's why we have to talk about issues with the Russian funds, because before the war, before the annexation of the Crimean Peninsula, Russia created huge sovereign funds which were higher than 10% of the GDP, and the reserve fund was kept at 10% of the GDP, and most of the money was invested into AAA or AA rated bonds. In US dollar, 45% was in US dollar, 45% in euro, and 10% in British pounds denomination. And some of it, I think half of it was used up already during the 2010s, and because of the shocks of the 2008 financial crisis, but still it was a lot of money. And some of it logged in at the BIS and other European banks. In this case, you cannot confiscate it because this is not nice. What they are doing, that they are not allowing to sell it, so this is still logged in. Also, they are not paying the interest rate. So the interest revenues are just collected on separate accounts, and sometimes they are giving it to Ukraine, sometimes they are just keeping there. So it depends from country to country and from bank to bank. I don't know where BIS is in this game, but but they also they have to follow the sanctions. So this is what can happen in this case. Also, they did nasty things during the last half of the Second World War, because somehow gold was moving from Germany to Switzerland, and also sometimes to Latin America, and then it was coming back during the 50s and the 60s to West Germany. BIS was also part of this game. You can find easily the sources for these things. So, yeah. So, that's all for today. And for this semester, I hope that you enjoyed. And please don't forget to answer the test questions.